We are back with another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And in today's episode, we're going to be talking about the rental crisis, why we're in a rental crisis, and what kind of needs to be able to change to be able to improve that rental crisis. There's a lot of pressure on investors, on landlords, that they are the devils. However, they are providing a solution to what we need to support releasing and improving that rental crisis issue. So, yeah, let's get into it. So, I firstly just want to get straight into some vacancy rate stats, and we're just going to go to SQM Research for those stats. They're pretty on the money with the vacancy rates. So, if we look nationally, vacancy rates are in September 2024, 1.2%. All right. So that's obviously across the country. And then once we break it down into some of the metro locations, we're just going to focus on the main metros. So Brisbane, it's sitting at 1.1% in September. Adelaide sitting at 0.6% in September. So you can actually see in this data, and you can jump onto the SQM website and take a look at this. The vacancy rate in Adelaide has been sitting below 1% since 2020, pretty much when COVID started to take place. Kind of bounced up and down a little bit. But yeah, pretty much 4 years that vacancy rate has sat below 1%. Some of the suburbs we target in Adelaide sitting at 0%. So not much stock, high amounts of demand that pushes your rental income, etc. Perth, same thing, 0.6% for September. Same trend, pretty much 4 years of sitting below 1% back in 2020. That one's bumped up and down slightly, but yeah, sitting well below that 1%. Okay, Sydney, 1.6% for September 2024. It's kind of bumping up and down a little bit as well. Still chronically undersupplied, right? Even though it is higher than some of those other locations. And Melbourne, 1.7% in September. And it's just, yeah, kind of hovering a little bit. And I guess over the last couple of months, it is improved, like it is increasing a little bit. But anything under 2% is still chronically undersupplied. It's going to put pressure on that rental income because there's just simply not enough properties for people to rent, and it is that supply versus demand. So this data won't take 6 months to solve. There's going to be a lot of things that have to come into play and then time to do its thing to really start to improve these issues. But there's a lot of restrictions that have happened in the past on investors that have ultimately resulted in the rental crisis and the pressure that we now see on tenants and renters. We need landlords. Everyone wants to restrict landlords, to de-incentivize them from making purchases and all the rest. But the reality is that we need landlords, and I'm going to kind of break some of the data down as to why it's so important that we have private landlords, and especially in the Australian real estate market, comparing that to other countries, which we'll get to in a moment. All right, so let's get straight into some of the restrictions that lenders have experienced in the last decade. And it was 10 years ago when APRA, the Australian Prudential Regulation Authority, it started to enforce restrictions on the number of investors lenders could have on their books and overall portfolio, meaning they might have been restricted to 10% of their portfolio could be investors. So all of a sudden, there's lenders out there saying, no, we can't lend anymore to you. You're an investor. Our books are full, or whatever the case is. So right there's that issue where landlords can't get loans. If there's less landlords, then there's less rental properties, and then there's less properties for tenants. So it's just that snowball effect. So it doesn't make sense to continue to restrict investors. What we then saw in 2016, a couple of years later, APRA again limited interest-only lending. So now we're restricting investors on the options they have to be able to hold debt to purchase property. And the reality is that some people just wouldn't purchase a property if they can't hold it interest only, because obviously their cash flow is not going to be as good. It's going to cost them a little bit more to hold that property. So naturally, there's going to be less investors again because of that restriction. 3 years later, 2019, they then increased the buffers and floor rate to 7%. So that's just directly impacting then what people can borrow. And then what APRA also did in 2021, most recently, is they lifted the lending buffer from 2.5% to 3%. So if you've got your lending, you got a 5% interest rate, they're actually factoring everything as a 7.5% interest rate and then increasing another 0.5% buffer. They're now factoring it on an 8% rate. So someone's max borrowing capacity, for example, was 500K, and then that extra buffer comes into place. It might drop it back to 450. That's just a round number, but that's the example. So it could mean, one, people won't purchase because they can't purchase the asset they want. It's what people do sometimes. Or it might just completely push people out of having the opportunity to be able to borrow and purchase another property. So there's all these restrictions from a lending point of view that have directly impacted the rental crisis. Okay. If I've spoken about it before, I would say 95%, if not higher, need to go and borrow money from the banks to be able to purchase a property, because unless you've got cash to make that purchase, I should say, you need that lending. So if we're restricting the amount of landlords out there getting their lending, it's naturally going to affect the amount of investment properties. And if there's less investment properties, there's less supply for our tenants and our renters. Now, statistics on the number of investors, I think, is really important, and just the statistics from the amount of people who hold one property to two properties. So 71.48% of investors hold just one investment property. Only 18.86% hold two investment properties. So what that data tells us is that, one, majority investors are our mum and dad investors, but then the number of investors who go and purchase two properties is extremely low. It drops so much. So our landlords out there aren't these massive capitalists that have oodles and oodles of money and all the rest of it. Even if it's the 1% of investors who hold 6 properties or more, it does not mean that they have massive amounts of cash. Majority of people are the mum and dad investor. They might have purchased an owner-occupied property. Down the track, they upgrade and then they turn that property into an investment property, or they've built up a massive amount of equity in that owner-occupied property. They don't have to use a cash deposit. They extract some equity, buy an investment property, and then they sit on it. I think that number could definitely be improved if people were more educated as well, because a lot of people go out there and make so many mistakes when investing, and then they get a bad taste in their mouth. They think it doesn't work, and that's why they're getting stuck on that one. That's why I'm so passionate about what I do, making sure people get that purchase right. But yeah, that in itself is just really important data, I think, that majority of investors are mum and dad investors. We want people to go out there and purchase property. Investment properties, I should say. I'm a massive believer that there should be an incentive out there for investors. And what it might be is someone who's buying their first investment property might get a stamp duty concession, 50% or something, because we need people to purchase investment properties to add that supply for our tenants and for our renters. First home buyers get the most incentives, and first home buyers absorb so much of the stock, and they're taking those investment properties off the market. They really start to push prices. They're acting emotionally and they're pushing prices higher, which is why people are out there complaining that property prices are so high and all the rest of it. Just one small factor. All right. Now, public housing in the Australian residential sector is a super important one. 3.8% of housing in Australia is public housing, only 3.8%, declining year on year. And if we compare that to 1981, it was 4.9%. So massively still low at that point in time. And look, it's only dropped pretty much 1%, but the reality is that that figure is so low. If we compare it to some other countries, England 17% public housing, Netherlands 29% out in front, Austria, North Ireland and Scotland 24%. So we've got multiple countries that are well above that 10% range, yet we're sitting over here at 3.8% public housing. So this is why I say we need private investors. If the Australian government's only offering 3.8% public housing, we need private investors out there purchasing investment properties to add supply for the tenants and renters. The more that lenders are discouraged, we've got 3.8% public housing, and then we're also stinging landlords, less landlords, adding that supply that we need. So this one, I just think is really important data. We need private landlords. I cannot stress that enough. Now, the government is then setting some targets around, I guess, adding supply for housing, which is fantastic that they're recognising the rental crisis and they want to do something about it. Now, they've set a target of 1.2 million new homes over the next 5 years from mid-2024. Now, based on these goals, they have never in the past achieved the amount of numbers they need to be able to supply and accomplish this goal of 1.2 million homes in 5 years. Now, the ABS, the Australian Bureau of Statistics, revealed the federal government over a quarter behind on the construction of new homes target and those monthly approvals. And they're needing to aim for 20,000 monthly approvals. So already behind, and we're a couple of months in. So not looking good. It was always a pretty ambitious goal. I still think it's great that they've got that outlook, but we can talk the talk, but we need to walk the walk, and we need to make sure what we're saying we're doing, we're actually accomplishing. It's great to have that target, but if the reality is that it can't be implemented and it's not realistic, it's not really ideal. So time will tell how that goes. But yeah, not looking good, unfortunately. Now, that's kind of the supply. We need this supply to be increasing. But on the flip side, our demand is actually still very high. So if we've got high demand, low supply, that's pressure. Pressure cooker for growth is what I like to say. Now, migration into the country for 2022-23 was 528,000, so over 500,000 of people coming into the country. 23-24, 395, which has dropped, and that's the goal. And then 24-25 to 60. So over a couple of years, that's pretty much halved, right, from the 500,000 to now 250,000 people, but still a massive amount of people coming into the country. 250,000 people, but then on the flip side, we're not adding the supply targets that we need. All right, so still not looking good. And the reality is that it's going to take multiple years to get the balance right, and then for that balance to then start taking effect. So it's a long game. It's not going to happen overnight. Again, we need private landlords, don't we? Now, some positive changes that we're kind of seeing at the moment. We're really going to get into an episode shortly. We're going to get a builder on that we work with and talk through some of, I guess, the state regulations, local council local council regulations and just, I guess, some changes that are coming for secondary dwellings. Less restrictions, bigger builds that can take place. And this is directly from the state government, and especially in Queensland, recognising that something needs to be done about supply. And secondary dwellings are a great way to add supply that we do need. So it's great that there are some positive things taking place. Those secondary dwellings are pretty much a granny flat. It's not the granny flat that's a clapped out old thing, spiders on the roof and all the rest of it. It's pretty much a brand new unit created on an existing house. It's got separate meters, it's got separate fencing, and it's got a bit of a backyard. So it's a great product that can be added and provide a solution to the crisis. And for so many people, it's going to, one, create that supply, but it's going to create affordable housing too, which for young couples looking to save up to purchase their first property or whatever else, it's a great solution. So there's some positive changes taking place there, which I think is fantastic to see for the rental crisis. Again, these changes are going to take time to trickle through. However, it is good that there's things in place and taking place. That's pretty much it for today for me, talking about the rental crisis, the restrictions that investors have seen over the last decade and why that's negatively impacted on vacancy rates, supply, properties to tenants, to renters. We have to flip the script. But we're again hearing the negative gearing might be coming back in. And that's just going to scare away more people. But it's popular for voting. When we come around to an election, it's just one of those topics that continues to come back around. Everyone does demonise landlords, so it's an easy vote. But that's a story for another day in politics. But what I'm trying to get at is that we need to encourage investors, because investors are going to help supply what we need to be able to help our tenants, help our renters, because the Australian government right now is offering 3.8% public housing compared to England, 17%, Netherlands, 29%, Austria, North Ireland, Scotland, 24%. So compared to those other countries, the government is not providing housing like other countries. So it's super crucial, super important that private landlords are out there adding supply that we desperately need. Anyway, I hope you got some value in this one. It's always good just to break down and see some of those impacts. Thanks for listening, and we'll see you on the next episode. Bye.